I want to talk about frozen assets and what it means to your family. Frozen assets. There are two types of frozen assets in Canada. We have what is called estate freeze and financial account freeze. And this situation happens at the point of death. And you need to be aware of this ahead of time. So currently, if you are watching me, my name is Yemisi Begushe. I'm a licensed financial security advisor, and the topic for today is frozen assets. Okay, why are accounts frozen? Accounts are frozen because of what is called tax has to be paid out, right? Accounts are frozen because they have to be accountable to what you have in your account at the point of death. It has to go through the probate system, right? And for estate fees, your your growth generated in your portfolios is taxed at a different marginal tax rate after death. So they freeze it such that so that there is a difference between taxes that your investment, your portfolios are subject to before death and after death. So I want to call your attention to this fact. There are two different types of reasons why assets are frozen at death. So let me give you a realistic example, right? If anybody was to pass away today and that person has assets, it could be TFSA, FHSA, stock, bonds, non-registered investment. It could be the person has 10 houses, the person has whatever, 10 cars, whatever the person has. All those, especially their bank accounts, it is frozen. The reason why it is frozen is the bank is accountable for any loss that happens to that account, even though the owner of the account is dead. And they don't want such situation. They don't want to have court cases. Banks do not want to do that. So it is frozen. Who is going to unfreeze the asset? The only person that can unfreeze the asset is the court. So there is something that is called probate system. Probate system is just a fancy word to say this person has passed away and the person has what we call predisposed, the person has deemed disposition, and that means at the point of death, all this person's asset is sold. So who is going to handle the tax consequences of different investment that this person has? Who is going to do that? We call that person an executor. And usually the name of an executor is supposed to be named in your will. So imagine somebody passes away today and the asset of that person is frozen the same day. What happens? The family needs money, but they don't have access to the bank account. But the family has access to something that is not going to be frozen. That is your life insurance policy in Canada. And also, if you have taken time to invest in segregated funds. The most important thing is that our most valuable asset is not the house we have, is not the mortgage of 1 million, 2 million. That is not our most valuable asset. Our most valuable asset is our ability to earn an income, right? If that is lost, especially to our loved ones, because the breadwinner has passed away, what happens is they are financially affected, whether we think about it now or not. So my job as a licensed financial security advisor is to help you understand the reason why you need life insurance. So let me start from the basics. If you are watching this video and you are single, let me see, life insurance is not my um priority now. I'm very young, I'm not even married, I don't have siblings. Okay, so let me explain it to you this way. The Do you like discount? If you actually like discount or you like Black Friday deals, the best time to get your life insurance policy is when you are young and healthy. When you are young and healthy, your life insurance is offered to you at a discount because you are young and healthy. So the cost of your life insurance is very, very affordable when you are young. But when you now wait and you procrastinate to like 5 years, 10 years, and at that point you now decide, okay, I think I need life insurance. You're already 10 years older or 5 years older. So technically you are going to pay something, you're going to pay a higher cost because you are 10 years older or you are 5 years older. Now, like I said, assets are frozen at death. Bank accounts are frozen, estate is frozen. Anything you own is frozen at death. The only thing that your family would have access to or they'll be able to claim tax free without having to look for means of unfreezing your frozen assets is your life insurance policy. And it is important that you understand that there are different types of life insurance in Canada. There are ones that you can use when you are alive. And my job as a financial security advisor is to explain to you what term insurance is, which is the most affordable life insurance, and what permanent life insurance brings or offers you. You need to understand that term insurance is very, very good. It is cheap and affordable to you, very affordable. But when it expires, when it lapses and you want to renew, it comes at a higher cost to be prepared for that. When you have a permanent life insurance, it's not for everybody, but it can be for anybody. Just like Tesla, if you don't need to work um, at an $8 million job before you can afford to buy a Tesla. Anybody buys Tesla now. What do I mean? The quality of your car is also going to determine a lot of things. So the quality of your life insurance policy will determine if you can use the policy when you are alive. So a $15 policy, $20 policy, $50 policy might not offer you what you actually need. Because for permanent life insurance policy, yes, it is able to pay out even at age 85, at age 90, it is still able to pay out. You can even still enjoy compassionate benefit at that time that you need it the most. Compassionate benefit is the benefit that is paid out from your life insurance policy, usually 50% of your life insurance policy up to a maximum of $250,000. What that means is you are alive, you can enjoy 50% of your life insurance policy. So, for example, you have 300,000 life insurance policy. It means you can enjoy half of that, which is $150,000. And if you were to have 500,000 and above life insurance policy, like 1 million, you will be able to only enjoy or access $250,000 from that life insurance policy because you um, are eligible for compassionate benefits and you need it at that most challenging time where there is a terminal illness. Apart from the compassionate benefits, you are also able to enjoy the cash value in your policy only when it has accrued and accumulated to a significant amount. You can use your policy as a collateral, you can get a line of credit by leveraging on your life insurance policy. And guess what? Excuse me. Guess what? You can use your personal life insurance as your mortgage life insurance. Whenever I mention this statement, I usually take time to explain it. I did not say your personal life insurance, you can use it to buy a mortgage. That is not what I said. I said if you have your personal life insurance, you can use it as mortgage life insurance. Mortgage life insurance is very good. But there's something better. Mortgage life insurance will pay the outstanding mortgage that you have to the lender should in case you passed away during the amortization period. So let me break it down. Let's assume you bought a house of $800,000 and you signed a contract of 25 years payment period. During that 25 years, you will still have outstanding mortgage balance at any point between that 25 years. Until after the 25 years, then you are fully paid for the mortgage. So what happens is during that amortization period, if death was to happen, unfortunately, you are still owing the lender. So who is going to pay the lender? Is your family able to pay the mortgage? If they cannot, that is what mortgage life insurance offers you. It offers that option to get the outstanding mortgage balance paid off, paid off, so that your family living in the house will not stress as a result of the mortgage and loss of income. Right. So now, like I said, the mortgage life insurance, the benefit of the mortgage life insurance is paid to the lender. The benefit on your personal life insurance, the benefit goes directly to your family, tax free, and they can decide what they want to use that for. I hope you have learned something today. Yes, there is something called frozen asset. Frozen asset happens at death. Every asset is frozen. Bank accounts, investment portfolios, all are frozen and it is called deemed disposition. So at the point of death, there's something that is called deemed disposition in Canada. It means whoever passes away, the government of Canada assumes legally that the person has sold all their assets. So when you sell an asset in Canada, some are taxable, some are tax free. So he's going to determine that. We call them an executor. And the system of evaluating your asset at death through the court system is called the probate system. So imagine you have gone to rest. You know, people don't want to talk about heaven, right? They don't want to talk about death, but they want to go to heaven. So my job is to actually talk about what you don't want to talk about so that your family will not say, how I wish somebody told us, excuse me. So yes, people want to go to heaven, but they don't want to talk about death. So let me explain it this way. Imagine your asset. You have like $2 million asset. You have like $300,000 asset at the point of death, and your family cannot access it because it is frozen, and they are waiting for the probate system. It could be unpredictable. It could take 1 year, 2 years, 3 months. But when it happens, the only thing that your family has access to, and they have access to it tax free, is your life insurance death benefit. Or if you were someone that had invested in segregated funds investment. So my job as a financial advisor is to educate you about these things that you might not be paying attention to. So your life insurance is a valuable asset. And for my friends and for my community that love to buy real estate, take note, don't create problem for your generation. You Make sure you set up life insurance that is able to support your family to pay what is called capital gains taxes. So in simple English, let's assume you have two properties. From now till you pass away, you have two properties. One, you live in this real estate property, but this one you use it for Airbnb, you use it for investment, you earn rental income. You see, this one is taxable in the hand of your child. We call it capital gains taxes. So before the government of Canada will allow your generation to inherit this property, they have to pay what is called capital gains taxes. So imagine you bought a house at age 30, you bought a house at age 40, and you pass away at age 90. For 50 years, the value of this property is worth like $1 million. And assuming capital gains taxes, let's even say it's just 200,000 or 300,000, for example, how will your loved ones be able to afford capital gains taxes of $300,000? The smartest way for them to be able to pay that amount of money in taxes is through your life insurance policy. So that's why I said when you are accumulating real estate, make sure you don't create problems for your generation by setting up a handsome life insurance. And here to help you set it up. If you want term insurance, fantastic. My job is to explain the benefits and the future consequences. My job is to explain to you if you're interested in cash value life insurance that you can use during your lifetime. My job is to explain the benefit and the future clauses and I hope you learned something today. So, the topic today was frozen assets. My name is Yemi Silebushe. I'm a licensed financial security advisor and I'm licensed in every province. Reach out to set up your policy. Thank you.